Live from the world headquarters of Concenture Wealth Management. I hope this finds you doing great. Everyone's having a great start of the year. It's hard to believe that we're already in actually, we're at mid-February. Valentine's Day is coming up. Can't believe that. I got to make a note. Otherwise, Allison will not be happy if I forget Valentine's Day yet again. But hey, glad y'all are joining us. I'm really, really excited. Back in December, we had the opportunity to hire a chief investment officer here at Concenture, Mike Alexander, who's with us today. I asked him to come on to kind of share with us kind of some of the ideas and the things that he's thinking about. A little bit of background on Mike. I've known him for a better part of 25 years. The last 20 years, he spent managing a portfolio management team at one of the world's largest asset manager, and basically just got tired of the political environment of working for a large corporation, was getting ready to retire. And I said, Mike, none of your buddies are retired. You're going to be bored to death. Come work with us. And luckily he was able to. Mike Alexander's with us today. He's the chief investment officer for Concenture Wealth Management. The one thing I would tell you is that there's not many people who can catch more fish than I do. Mike Alexander, from time to time, has been one of those people, and he brags about it all the time. So, Mike, thank you. And we're really excited to have you part of the Concenture team. Tell us just kind of a little bit kind of about you and kind of a little bit of background.
Yeah, you bet. Well, first of all, thanks a lot. And I will say a very kind introduction from Mr. Gilliland. I'm not sure if I've ever caught more fish than he has, but we try to keep it. We try to keep it close and competitive. Just a little bit about me. I've obviously been in the business for a long time. You can certainly see that I'm not exactly the youngest looking guy here. But that said, I spent the better part of my career with BlackRock, and I had multiple roles along the way. But the most recent of those was working as a senior strategist on one of our teams, which was our multi-asset team. So essentially, the better part of my career has been visiting with foundations, institutions, clients around the country. Spent a lot of time on the road. And as I always tell Robert, I said I pretty much know where all the Dairy Queens are at this point. So it was really a great ride working for the largest firm in the world. But to Robert's point, after a little while, you want to step aside from that and take on a new challenge. So really happy to be here, and always good to get a chance to work with one of your old friends.
Hey, we're going to have a ton of fun, and I know that you're going to add a ton of value to our clients. So since December, you've been doing a lot of work in the background. As we've moved into the first part of the year, and as we look forward, what are the three things that are kind of top of mind for you when you're looking at how clients should be looking at portfolios, things that we just have to really be aware of as we look forward for this year?
Yeah, I mean, it's a great question. Look, there's a lot of things clearly that an investor can be looking at, but I would say that the three main things that are on my mind are one, interest rates. I think that's front and center. It's no surprise that the central bank has really been on the front burner, if you will, and so I think investors are obviously very keenly aware of the path that the central bank has been on, which has really been, raising rates, raising them quickly and by a large amount. I would say that, parts of that perhaps have not even filtered through the economy. I would say the second thing is employment. Employment right now unemployment rate is running at about 3.4%. That is really historically very, very low. The long-term average is around 5.7%. And I think both of those two items tend to tie into one another, in that you have a central bank that would really like to see the unemployment rate a little bit higher. That doesn't sound very positive necessarily. If you're an investor, you're like, why would the central bank want to see unemployment rates higher? But I think what it would do is that it would allow It would allow the economy to naturally slow down without causing a severe recession. And then I would say the third part is corporate earnings. I think if you look at where markets are right now, we're trading at about 18 and a half times expected earnings as we move forward. I'm not going to tell you that that's exorbitantly expensive, but it's not dirt cheap either.
Right.
And so the result of that is that you're likely to see a lot of volatility, in particular around any of these data points that you may see. So tomorrow, when you see, jobs numbers come out, I think you'll see some volatility around that. I think it's been very, very clear that the central bank has been relatively hawkish in terms of their policy, and we've yet to see all of those hikes filter through the economy.
Yeah, what's kind of a couple things that kind of struck me from what you said is on interest rates. The Federal Reserve has said we are going to continue to raise rates. What's real interesting about the market is that this first, call it 6 weeks or so of the year, it's all eyes have been on earnings. And Chairman Powell just recently said that they're paying attention to the data. So the markets are kind of moving in relation to, they're paying attention to interest rates, but what company earnings are and what the CEOs are saying. But as soon as we get past this earnings season, all eyes are going to be on the data. And Powell said that's the case, right? And so and correct me if I'm wrong, I think it takes about 9 months before an interest rate hike gets into it actually starts to filter through to the economy. So we're just now starting to experience some of that.
Yeah, absolutely. I would say one thing, just as it relates to the earnings season that we're going through right now, approximately 70% of companies have actually beat their earnings, the earnings forecast. And I would say about 60% of those companies have beat on the revenue numbers. Interestingly enough, both companies that have beat their earnings expectations and those companies that have missed are all positive. So even if you've missed your earnings, on average, those stocks have gone up as well. So I think a lot of that has to do with just early years, the seasonality of capital flows, and just the fact that a lot of money comes in at the very end of the year.
Yeah, and so as you're going through and looking at this on the employment, the one thing that's interesting me about employment is back in 2019, we were 67 or 68% employment utilization. That's the people of working age that had jobs. At the end of the year, we were at 61%, and it was just reported that now we're at about 63. There's a lot of people who've left the workforce. How are we going to get that unemployment number up? Because there's more jobs available. There are more jobs available than people looking for jobs. So that's going to be interesting to watch. And as we're kind of looking at this data, the thing that strikes me is that we're getting into a period where bad economic news is good news for the market, because the market's going to try to read the tea leaves right there, right?
Absolutely.
So, hey, Mike, I know we wanted to keep this relatively short. Any other thoughts or any other things people should be looking at or thinking about with regard to their portfolios?
Yeah, I think there's a lot of reasons, I think, to be generally optimistic. One thing is that we're in a period now where if you're keeping dry powder on the sidelines, as we've been doing, you're actually getting paid to do that, and it's the first time we've seen that in a while. And so I think that we're in an environment where the 60-40 type portfolio actually looks pretty good, because you can get returns in multiple asset classes. And so you don't have to just go to the equity market to get returns. I think you can be relatively balanced and have a good experience.
Awesome. Well, Mike, thanks. I look forward to having you on these a lot. I look forward to you jumping in on calls and conversations with clients. Like I said, we're really excited to have you here. And to everyone out there, thank you for taking the time to watch this. Please know if anything that we talked about creates a question or you want clarity, all you have to do is zap us an email, give us a call. We're more than happy to have those conversations. We appreciate the faith and trust that you put in us every single day to help make sure that you're able to reach your goals. And with that, I hope you all have a great rest of February. We're getting ready to get into Mardi Gras season, so life's going to be great. And talk to you soon.